I like to start with the key messages, what we're aiming for. These are, let's say, the condensate of everything we want to achieve. First, our ambition is to be and to become the leading European telco. Now, a lot of you might associate leading with big. That's not what we are talking for. We're talking leading in the categories where we are operating. And leading, by the way, that means leading in differentiation. Not doing the same of everything, but doing something different to how we run Deutsche Telekom and a telco operator. And we have two categories where we think leading is a big opportunity. The first one is on the infrastructure side, and the second one is leading in the choice for customers in the relevant markets we are operating. On the infrastructure side, the differentiation is coming from three areas. First, investing into converged infrastructure more than anybody else. Second, migrating the net faster to IP than all the others. And thirdly, it's about the pan-IP, the cloudification, the virtualization of our infrastructure across the European footprint. If we are faster, if we are more consequent in this regard, we're going to build a more modularized platform than anybody else, and then we have huge advantages on the one side to serve our customers, but on the second side, on the efficiency, how we run the network. We are true believer that we could imitate something from the car industry, which you have seen in the 90s, where the Japanese arose with their modularized way of producing cars in a different manner, in a very, very standardized way, but differentiating in the way towards the products to the customers. And that brings me to the second side of the differentiation. The second side is the customer experience. Now you might say, oh, we have heard so much about the great service, better service from all the telcos, which is true. And you have seen us even, going a long journey, especially in the business where we have an incumbent heritage. But I can tell you we went a long way. In Germany, we are perceived as the best service company already today. But when we talk about customer service, we are not talking about servicing only. We are even talking about the products which we are bringing to our customers. The proposition, which is going to be fixed mobile converged, which is integrating new functionalities. And only to talk about Germany, Magenta 1 was a coup in the German market with 650,000 customers since we launched. A huge success so far, with a different functionality, not coming at lower cost, but better service quality for our shareholders, for our customers. Now, this is, let's say, the second area of differentiation. We are going to self-fund this growth by a very intense cost reduction, which we're going to drive throughout the next years. And with this, we're going to be able to fund the high capex to sales ratio, which we already have, and where we believe we could even slightly increase throughout the year. But this not at the expense of value creation. Our clear ambition is that we are growing our financial KPIs on revenues, on EBITDA, on free cash flow, and on return on capital employed until 2018. And by the way, not promising another hockey stick, as a lot of the competitors saying it's going to be better, but the next year going to be worse. It is going to be starting already in 2015, where we promise an increase in all the relevant metrics for Deutsche Telekom. On top of that, we stay to our prudent debt policy. This remains unchanged. And we will even let the shareholders participate with the growth of dividends following the free cash flow which we are promising. So in a nutshell, this is the story from a customer journey to a prudent financial policy into commitments towards our shareholder to create value over the next years. Now you might question, do these guys have a track record on their promises? And therefore, as you might have witnessed, we always, trying to be open and honest and not trying to oversell and being transparent in the way how we're communicating. And therefore, we have just used the slide, which you know from our last Capital Markets Day in 2012. And these were the big commitments we have given. And you see, let's say, the traffic lights on the right side, whether we were able to deliver or whether we didn't deliver. Very quickly on this topic. We clearly delivered on our promise to grow our revenues from 2014. Only we are able to show an increase on our revenues by 4.2%. Organically, 3% year over year. And you see that the group revenue has been achieved with the big support, by the way, from the US business, but even the improvements in Germany are quite encouraging, and come to that in a second. Secondly, on the group EBITDA, the year-over-year performance is in line with our guidance, which was predominantly driven by the much higher than anticipated customer growth in the US. I think it was a wise decision to go for a little bit more growth here. We clearly will not reach our promise on the 6 billion free cash flow target for 2015, as already communicated in March last year, which is due basically to two entrepreneurial decisions which we took. First, we fund the stellar US growth with more CapEx and push our LTE and narrowband rollout and coverage in the US, and by the way, even in Germany. And second, that we took the decision to restructure our system solutions more consequently, and the T-Systems 2015 program came with special items which were costing us cash. On the adjusted earnings per share, we even were not able to achieve the projected number, which is the result of the heavy investments into the US and therefore of an increased depreciation level which we have seen. In the rest of the business, by the way, depreciation is declining as projected at our Capital Markets Day in 2012. Our group return on capital employed, we came in at 5.3%, but this was helped by the Scout sale and the spectrum swap within Verizon. Underlying, the return on capital employed nonetheless improved slightly to 4%, showing a small but steady development into the right direction. And most important for you, as always, we were reliable and predictable and delivered on our shareholder remuneration promise with the 50 cent. And by the way, yesterday the supervisory board took the decision to remain 50 cent to the AGM, which is going to be held in May. So a mixed picture, but overall, I think we were able to make it transparent why we had to invest more of our free cash flow into the stellar growth in the US, which is hopefully creating then additional value throughout the next years. Now that said, this is, let's say, the detailed map of the measurements which we showed you at the Capital Markets Day in 2012. I'm not going into all the details. You could read them. Everything is in the booklet which is in front of your table. But if you would ask me the pattern, why we achieved certain things, I would give you 4 main reasons. The first one is, I think, we are good and diligent in the disciplined execution of things. And we've even strengthened this initiative. Nobody believed us that the US Un-carrier strategy is going to show the results it showed so far. In our mobile leadership in Germany, the network rollout very early, the rollout of VDSL very early gave us an advantage to our competition, which was even, giving us, now nice results on the revenue stream. The cost discipline in Europe is outstanding. Last year, we lost 500 million on revenues and only 40 million on EBITDA. This shows how disciplined the European organization is adapting their cost structure to the environment the companies are working. The second thing is the very disciplined approach towards pricing. It is not our intention to match every single high street price. We want to differentiate in what we are offering. And Magenta 1 is just an example. If you can't win the game, change the name of the game. You have seen mobile prices, $39.99, $35.99, $29.99, $59.99, $9.99. It's always the same game. You compare yourself, but if you cannot compete on prices, the only answer is cost. And honestly, we are tired of imitating the last high street price. It's our intention to bring a product which is different to what is offered on the high street. And so far, with the difference on quality on the network, with the difference on the quality of the product, with functionalities which are included in our products, we are, to a certain extent, able to differentiate to the high street prices which are mainly offered mobile only, fixed line only, or other services. The third driver of this execution in the last years is an outstanding M&A performance. I think this is a great track record of selling non-core assets at very high multiples and at the same time creating new opportunities at very reasonable multiples. And I will come to that later on again. If you take the sale of Scout at a multiple of 20 times, or even if you take the Metro PCS merger with a starting price of $15.60, while we today hold a share price of $32. So the last topic of why I think we are good on execution is the communication. I think we have a very aligned communication across our entities. It is much more of one company than rather a conglomerate of different entities, and the clear communication even helped us here on the execution, combined with some of a new issue which I think very important. What are the surprising elements for your customer? Being it partners, being it products, but you have to surprise your customer. Because they are not looking only on price points. They even want to have future inbuilt. And the latest announcement with our partnership with Airbnb is not a surprise, but it's important for a part of society, but I come to that in a second. Now, this helped us as Deutsche Telekom to create value for DT shareholders since the last Capital Markets Day. And what you could find on this slide is, in the middle, the total shareholder return of Deutsche Telekom, which was, since our Capital Markets Day in December 2012, 108%. 108%. If you look to the DAX, showed a performance of 46%, the DAX, 41%, the Stoxx 50 at 46%, and the Euro Stoxx 70. We clearly were able to beat the index. And if you compare ourselves with the relative picks in our industry, you even see here that most of them are significantly behind the performance of Deutsche Telekom. And I think predictability and reliability was an asset during the last 2 years. At least we took that as a learning from the feedback which we got from the capital markets. Total shareholder return is not only important for you guys. Total shareholder return is even very important for me, because I hold quite a significant piece of this company, at least, relative to me. Not as John is doing for the US, but anyway. But I remember pretty well the discussion which we had at the last Capital Markets Day. And the question was here, how many of the leaders in this organization are holding shares of this company? My answer was 150 with the new program we launched. Today, 2,400 people, 2,400 leaders are managers, but even shareholders of this company. By the way, they get the daily review from our investor relation team in the morning and in the evening, how the performance of the market is. They get the sell-side analyst reports, so they really understand that the share price is the indicator of the performance of this company. The third reason, I think, why we performed better than the index and our competitors is luck. We were simply lucky. Because being Germans in these turbulent markets, sitting in a market where 60% of our equity is based in an environment where the market started consolidating as a consequence, by the way, out of the strength of Deutsche Telekom, I think in this market we were even lucky with, let's say, being a little bit of the safe harbor for a lot of investors in the past. So it's not just all smart execution. Sometimes you even have to be lucky. Now that said, this is water under the bridge, as you always say, and remind me what's happening for this. I'm not going into the detail of what we have announced for the 2014 numbers, because today we are not holding the normal earnings call. And therefore, you find the highlights and the brochures and the details in your booklets. Let me just give you a few highlights of this very strong quarter of Deutsche Telekom in its markets. 4.2% growth. I cannot recall that we ever had a revenue increase like this in the past. 3% on an organic basis. Mainly driven from the US, but a lot is coming even, from the good performance in the German environment. DT last year shares yielded at a return of 11%, comfortably beating the broader indices and all peers, and a commitment to the dividend, as I said already. In Germany, we had a very good operational year with Nikian and his team, with a 25% reduction in line losses year over year. Return to significantly positive broadband, net adds in the Q4. I know this is one of the headaches investors had. Good take-up rates for fiber and TV. To give you a number, 1 million fiber customers last year. This is 100% more than the year before. Wholesale and retail doing very nicely. Wherever we build high broadband, we find new customers. 250,000 new TV customers in Germany, and a very successful launch of our first integrated offer. Nikian is going to talk about that. To give you one indication, the ARPU per household is up €4 for this 650,000 new customers. So it's not just another rebate. it is something which is differentiating towards customers. So far, so good. Operational progress is even reflected in a very healthy operational revenue, but especially the margin with 40% is, I think, very, very strong. So knowing that we have a lot of triple-digit additional cost for the IP migration in Germany, I think the 40% is a stunning number. On the IP migration, we migrate 60,000 customers a week in a very constant way. And we are talking about how many customers already have been migrated so far. The US story you already know very well after our US colleagues reported their earnings already last week, and John and the team is going to talk about that in detail later. But I could tell you, Harvard and Stanford, these guys sitting already on cases, on business cases, to really describe this turnaround in the US. It was the best year in history of T-Mobile, 2014. By the way, even from a customer, but even from a development on EBITDA and free cash improvements. So it's it's not just a customer game. It's even showing results. In Europe, we continued our revenue and production model transformation. We showed an impressive 600 million OPEX reduction, resulting in an EBITDA margin improvement for the segment in 2014. And in T-Systems, we achieved the first results from our T-Systems 2015 restructuring program, and we even see a nice progress on the margin side. And by the way, even our order entries are developing nicely. I think it's more than 1 billion now already. So therefore, I think 2014 was a good year for Deutsche Telekom. Let me come now to the environment. It is very difficult to summarize group strategy and its development in 2 or 3 slides. And therefore, I'm not going into every single detail. We could follow up on that one. But if you categorize the development of our industries, we see 3 big trends. The one is the customer trend, and the customer trend is going to more digitalization. The customer trends are going into seamless connectivity, into the sharing philosophy, which is coming alive for every single item, from your home to your car, to your emotions, to your experience, to your know-how, to your cars, whatever you could imagine. And there should be somebody who is enabling this. Individualization is the key is the name of the game from the over-the-top players, but even from the amplification. All kind of use cases for partners should be enabled for all aspects of life through our platforms, and mobile first stays even more relevant. The second thing is the technology trend. It's all about virtualization, softwareization, the hybrid infrastructures we're going to build, the modularization of the product platform, and the new technology developments which we see to enable the different environments. 22% of people are older than 60 today. This was, it's going to be in 2020. Today it's 11%. 50 billion connected things going to be in the network by 2020. 40 billion investments in the so-called industrial internet are coming. 50% of online sales going to be handled over mobile. 55% of all CEOs in our environment would source application and services into the cloud. In 2018, the market for new devices like wearables is going to amount the size of 90 billion. Our networks should be ready for that. And that's our intention when we talk about seamless connectivity across all infrastructure opportunities. The third one are the business models. And even our business models, we are operating as a telecommunication operator. are changing quite rapidly. The name of the name is open or closed platforms, network effects by internet companies, ecosystems which are established with partners, more being outsourced than insourced. Data and big data hasn't been really used from over the top, from infrastructure companies like ours so far. Data analytics is becoming key, not only for consumers, but even for the industrial internet. So this is, let's say, in a nutshell, the trends we have analyzed. And if we move along, you see our thinking on how this world is going to change. Maybe some of you have been in Barcelona's Morgan Stanley conference recently, and we had this discussion about sharing. Our belief at Deutsche Telekom is the sharing paradigm. The sharing paradigm is the driver for our ecosystem, for our business model in the future. Life is for sharing. It's not an accident. It's a promise. That we are partnering exclusively with Airbnb in Europe, that we have an exclusive partnership with Uber in all our European entities, that we are now working with GE and Cisco together on the industrial internet side, as well developing things with Siemens in the discrete production, is not an accident. It is the belief that we need platforms where all these devices, these functions, should be enabled via Deutsche Telekom. And you see that as an example on this slide, here on these devices. Life is for sharing. How is this sharing taking place? We have seamless connectivity. LTE, wireless LAN, fiber, hybrid, fixed line. The device is automatically accessing every different infrastructure. No different tariffs, no different ID management, no different passes whatsoever. It should be seamless in the way it is operating. Second, the sharing of different apps, being it the Airbnb, being the Car2Go, being it the Uber. There are 1.2 million apps today on iStore, on the iTunes cloud, or 1.4 million on Google. Guys, nobody cares less about this huge amount of number. We have to tailor it. We should, with content injection, help customers to access the relevant, the most important devices. The third one, we are not exclusive to certain devices. We are inclusive. You get all different devices via our channels, and even, our partner ecosystem is bringing an advantage to the partners. You see the 35 euro voucher, which is coming with the Airbnb offer for every single customer. You saw us being first that the Spotify tariff is not eating up your data volumes at T-Mobile US, but as well at our operations here in Germany. And the last thing is just mobile first. We should never forget, mobile is the name of the thing which we apply. On the technology side, we have to adapt 4 trends. The first trend is softwareization. The softwareization is SDN and CDN. This will replace customer hardware. With this softwareization, we become much faster and much cheaper in the way how we operate, with less, by the way, indirect cost within our organization. Virtualization is the next paradigm which we have to apply for our business model. Cloudified IMS, cloud VPN services. So IP communication across, let's say, different countries should be operated via a cloud service. This is creating higher redundancy, higher quality of service, and it is even creating independence from expensive hardware. The third main driver is convergence. Convergence is, bring it all together. If you really want to bring fiber-like experience to every customer. It's only possible if you amalgamate the different technologies in the most efficient way. And the last one is data analytics, big data. Big data is the name of the game for the industrial internet, by the way. The opportunity is even not really seriously valued for all of us, but the optionality of producing a size slot of 1 at the cost of a mass market product, to steer decentralized production areas with real-time analytics and high-performing infrastructures is a big productivity driver for the industry, and that is, by the way, very relevant for the German environment. All of this, by the way, trust and security as a value of our brand from Deutsche Telekom. So these are the drivers on technology. And the last part is the business model trends. This is a big worry for us. If you see on the left side our business model of today, we are operating in open platforms, highly regulated, interconnection, number portability, roaming across all footprint, interoperable standards, and in regulated environments. This industry is heavily asset intensive, heavy network investments, and therefore we have to scale for utilization. We have to try to fetch a premium from our consumers. In the same ballpark, we are in a conflict with the over-the-top players. They have closed platforms, no interoperability. They are creating, with the big size of networks, a de facto standard, which is closed, and they are totally unregulated, independent from the fact that they're operating in the same business model as we are operating. Nobody would question that Microsoft is with Skype operating a communication service. They're even not registered at regulators. Would you question that Facebook is a communication service? Nobody does. But nothing of this business is regulated. So therefore, we are competing with the freemium service where you're paying with your personal data, with the service where we are trying to get money for our business, for our asset-heavy network investments, in a model where it's very differentiated to compete against something which is zero rated. So what's the answer for the telcos with their huge investments? This is, I think, the third trend which we have to tackle. Now, going forward, this is the answer. And by the way, there's much more. I could take hours for that one to guide you through that one. The first thing is what we are saying is we fight for our control points in our value chain. And we want to establish more control points which are different than what the over-the-top players are offering. And what you could see here is the value chain of a classical operator. You have a dumb pipe access, you have an owned network which you steer with your services, you have access enabling hardware with SIM cards which are enabling consumers, you have the services on it, TV, conference service, collaboration tools and others. You have the device distribution across the different channels you're offering, you have a contractual billing relationship with the customers, and you have your sales and service channels which you're offering. This is what we're doing today. What we're seeing is that we have a threat from new players who are trying to eat up value of our proposition. Being it infrastructure project like Google Fiber in the US, being it virtualized eSIM offers of Apple and others, being it the substitution of communication suites by Facebook, being it the retailization of handset and devices by Amazon, or being it even, new kind of customer relationships, which all these guys are trying to build within their closed ecosystems. You want to have a service? Apply to iCloud. You want to have the service? First, register as Gmail. You all know this. So we see them how they're trying to reduce the value chain of the classical telco operator. The answer which we are trying to do is we have to differentiate in the way how we offer the proposition to the consumer. The first thing is the seamless connectivity in fixed and mobile. the infrastructure which we are offering, which has a huge value for the consumer. The best infrastructure, I go to Deutsche Telekom. That's the first I need before I go to services which I have in outside. State-of-the-art devices, not exclusive, inclusive. Offer new devices, not only one. Offer all the handset suppliers which are relevant in the ecosystem. Always bring new players into the game. The tariffs offers should not be easily subsidized by zero-rated services. So Magenta 1 is not offering just connectivity for home and mobile. It's even including the entire functionality of your home base into that one. Strategic terminal management on top of that, and high security. Germans are totally crazy about security. I don't know why. But this is a value. And if you could sell the security, convincing customers that we guarantee your data is always safe, this is a value where people are willing to consider Deutsche Telekom or carrier as the operator. And a service which is helping people in this digital life. To be the digital companion in this environment is something where we could leverage our business on. So this is, I think, the idea to keep value points against the substitution of over-the-top players. Now, facing technology trends, facing the customer trends with sharing economy, and facing the over-the-top substitution, what is the right strategy and the execution for Deutsche Telekom? And the answer is very simple. A strategy is a strategy is a strategy. We have laid out this strategy by the beginning of next year, and we confirm that this is the right strategy going forward. And we had to adapt to certain things. We had to accelerate certain things and focus. But in principle, integrated IP networks, best customer experience, winning with partners and surprising them with them, and leading in business are the right answers for the challenges which we see where we embed our measures. Now, you cannot answer everything by just putting paper onto the table or executing along that. You might find yourself in 2 years from now and say, how do the telecom guys think about certain things which they haven't addressed in their presentation in 2015? And therefore, we found it valuable to just share a slide with you how we believe, how we decide on things, what's relevant. So if you might ask yourself, what would these guys do? What would these guys consider in a certain situation? This is the way how we think about things. First, we will relentlessly strive for delivering best customer experience. Our products are based in the paradigm of sharing. Simple, simplicity is very important, reliability, and secure. Our networks will provide better, best seamless connectivity. That's why we're investing this huge amount of money into this consistent infrastructure. Thirdly, the sales and service processes go digital. Digital was a channel in the past. Everything is digital in the future. Omni-channels and 24 hours, 365. This is the ambitious that customers could administrate themselves at any time on their own. Partner products and services amend our core production. We are not trying to compete with the agility of application managers in the Valley in Israel or maybe in Berlin. We will partner with them. And advanced data analytics will improve and extend our service offering. We will work on big data in the future with a bigger focus than we did in the past. Technology leadership with a superior production model based on fiber-based integrated IP networks. They will deliver superior coverage, speed, and quality. This is the basis, the foundation. I'm a devoted network investor, And you know that already from last year. We invested 15% more than the year before. We scale our production across footprint for efficient and time to market. And we are open and interoperable connected data platforms. We cannot build a closed platform as Facebook, as Google, maybe even at Amazon, and therefore we are trying to scale platforms with open interoperable platforms like the Tolino, like the KiwiCon platform, and like others. And last but not least, if you want to transform that company, you have to transform the organization, and you need transformational leaders. Some of the insights I had as a EC is that we need more transformational leaders in this organization from an operation. We have imperatives for our leadership. A leading European telco needs more collaboration, more empowerment, and more innovation. And we will constantly raise the bar in the way what we define as targets. 100% achievement last year will not be the 100% achievement in the next year. We will constantly raise the bar with regard to our targets, which we impose to our people. And we want to think even more customer-centric, more disruptive in the way we're approaching things, and to taking a truly international stand in the way how we're operating. Less German in the way how we're operating. In detail, that means seamless, high-performing networks. What is the message on this slide? Last time we said we're going to build 65% in Germany with up to 50 megabit per second. Today, with the same amount of money, we have learned a lot, and with some regulatory improvements, we will increase our build-out to 80% for 50 megabits by 2018. We significantly increase our build-out. To tackle the cable competition, we will improve our supervectoring, accelerate the supervector out in the cable areas. In all cable areas, we will go to 250 megabits per second, at least where we have competition from infrastructure. This is the huge commitment combined with download speeds of up to 500 megabits via our hybrid infrastructure. I could tell you we will almost cover full Germany with LTE, 95%. We are already leading the pack in this regard, and we will attract the offer with 264,000 hotspots and 2,000 small cells that even in the dense areas, in the cities, that people have always the best and fastest access wherever they are. This is the new build-out commitment for Germany. By the way, Deutsche Telekom now alone is covering, let's say, the digital commitment of the Bundesregierung. With this commitment, we'll see how our competition is going to react on that one. In Europe, we are following the same pattern, maybe with a slight delay. 75 to 95% LTE coverage, 50% of households with at least 100 megabits, and 12% of the households up to 500 megabits, plus 1.6 million hotspots. This is the foundation, the basis on which Deutsche Telekom is offering its services. On top of that, a superior production model. I know we are totally alone in this environment. But if you want to differentiate in doing something, you always have to do something alone. And this is the way going forward. All IP transformation, only in January, 330,000 customers have been migrated on IP in our European footprint, including Germany. This is a heavy additional cost which we are carrying today, but this is paying off later on. Not only from a cost perspective, the customers will love it. It makes it possible to deploy services like TV and others much fixer into the companies, into the customer living rooms than we could do that today. Pan-European network, time to market is the name of the game behind that, and efficiency. And the integrated network strategy, I think I made that already clear, to deliver best connectivity. This is differentiation for infrastructure as Deutsche Telekom in its footprint. And just take a cable operator who only has a cable. What could he do against this one? Think about a mobile operator. They might have a niche, but they do not have, let's say, a market which they could really address, the total amount of markets. Think about all the companies which are just talking about integrating their services. We have already one company totally integrated in each of these entities, and now we move even beyond that. So I think this is a true differentiator to the way how we are operating our factories. This will give us an annual run rate of OPEX savings of 1.2 billion within our business case over the next years. Second, the integrated customer proposition. This is the journey we went. In the past, you had a mobile tariff, you have an internet tariff, you had maybe a DSL service, you had an access, whatever you had different tariffs for everything. High complexity and very often easy to compare. We radically simplified the silos in the past into home and mobile, and now we're going into one converged portfolio. And by the way, this converged portfolio is not a tariff. The tariff is just the beginning. Our intention is to have a full functionality behind this tariff. It should include TV services, it should include smart home, it should include seamless connectivity on the move, it should include communication tariffs anytime. This is what we're working on. We have learned from our American colleagues, Uncarrier 1, Uncarrier 2, Uncarrier 3, and you will see Magenta 1.0, Magenta 1.1, Magenta 1.2, and so forth. That's what we are working on. And we want to change the name of this game, because you cannot compete if people are talking about 5.95, a mobile flat tariff, which you see in German market. Nobody's buying, because nobody believes that it's a trustworthy tariff. After 6 months, it's going up to 19 or whatsoever. So you have to change the name of the game and anticipate what the customers are asking for. Next topic, partnering. I made clear what partnering is about. We want to increase our ambition levels for the partners as well with our Steckerleiste. We will talk about that later on one of the presentation. Subscribers going up to 6 million in Europe and 6 million on top of that in Europe. That's our ambition level for our partners story moving forward. This is a very important part for making the services for our customers easier than before. Lead in business, the fourth pillar we're standing on. It is across Europe, it's across T-Systems, and it's across Germany. We focus on integrated services. We focus on standardized clouds. We focus on machine-to-machine to enable industrial internet. And we're going to focus even on the way how we're servicing with our system integration partners and even with our organization on the customer side. This is taking place in all of the entities we are operating. And therefore, our target is to increase the B2B and ICT level by revenue growth of 12% in Europe, T-Systems by 3% revenue growth in the market unit, and the mid-market initiatives, which is handled by the German organizations, by 400 million until 2018. The next slide is just maybe an excursus, but I want to draw, and by the way, we do not have all the answers. A strategy, by the way, is even something which is going to take place in the future. So therefore, don't blame us if we cannot give you all the details. But we truly believe that Deutsche Telekom has something to offer and to gain in this industrial internet. Germany is highly industrialized. The wealth of Germany is based on its car, on its engineering, on its process engineers and industries. And therefore, the digitalization and the next step, not the softwareization, this is what they do pretty nice already, but the connectivity across different industries, the Internet of Things in this environment, is definitely a big opportunity for us at Deutsche Telekom. And how we are tackle that, with services on SMAIT data, with an open and interoperable platform. I cannot go into the detail what we mean with that, but think about a Tolino, think about a Quivicon for the car industry. Why do they have to store all the information like traffic information, like weather, like content for the cars in 10 different platforms? Why can't there be a kind of open platform where some of the informations are getting aggregated and distributed to different cars, while there are always specific informations only the car producers own? I think they are threatened that there might be a closed standard coming from the over-the-top players like Google's and the like, that they even might consider building cars at one point in time, and we could help them to facilitate this kind of open platforms. And you could apply that for a lot of industries. Think about the process industry. We have already big projects in this regard, where we, by the way, already make double-digit revenues. The venture with China Mobile on the connected car services is one example. We have 1 million Daimler vehicles connected on their command online services. We have with Claas, one of the biggest harvest manufacturer, a telematics service and data analytics in place. We want to be part of this industrial internet, which is taking place in Germany with all the requirements of German customers. This brings me to a list which I cannot walk you through, but please have a look into that one and ask yourself what innovations Deutsche Telekom is working on. And this is what we are working on these days across the pillars within our digital business unit and together with our newly formed entity, DT Capital Partners, which is a 500 million venture fund, which we just have established to participate even in ownerships with partners which we drive through our innovation labs within Deutsche Telekom. These are, let's say, the focus areas we are working on. So we have radically reduced the list of things which we are deploying over our labs, but this is, let's say, the list on topics we're having. The last topic brings me to my biggest customer. We could sell and sell and sell and sell, but you know, the moment the regulator makes a mistake, I could tell you this stands for 100, for thousands, for millions of customers. On a value perspective, we might win or we might lose. This is unfortunate, but this is reality. And therefore, to only give you an impression what I'm spending my day on this very important customer. Because the environment, the regulatory environment we are working in is so critical for the value of this company. And therefore, the most important part is that I'm trying to convince leaders, regulators, that we're living in a converged world. That media, over-the-tops, telcos, and cable operators are operating in the same environment and they should apply to the same rules. This is the convergence of them. So the moment we have cable operators, let us out of regulation because you have two alternative infrastructures. It cannot be that we are regulated on number portability while you cannot carry your content from iOS into the Android world. So this is the main driver of the regulator work. On top of that, our strategy behind regulation is addressing, first, what would you do to improve the revenue profile of the companies? Second, how could we generate scale? Because that is helping the utilization. Thirdly, what is it where the competitive is not offering a level playing field? And last, how do we tackle the investment issues of our industry that we are, let's say, getting more safety on this huge infrastructure investments which we are carrying. And therefore, on the revenue side, I think price regulation, quality differentiation, and the consistent legal framework with the over-the-top players are the main drivers. on the scale side, enable market consolidation across Europe and not regulating access always on the 28 different markets is something should be understood. And the cooperation to promote open platform and interoperability than rather having closed monopolies who are, let's say, creating their own business models independent from us. On the competitiveness side, we should apply all within these converged industries to the same data protection and data security laws. There should be interoperability between all these players in these industries, and there should be consumer protection. Because the moment we have a scandal with Facebook, the guys are calling us. They're not calling Facebook. And the last one is investments. We have to get incentives for broadband infrastructure investments, not only in the suburban areas, but we have to get better funding opportunities. There's a big discussion which is going on in Brussels from this 500 billion program, which is now brought forward. We have already big programs in Germany, like Bavaria only have 2 billion of these programs in place. And we have to get new spectrum policy rights. So what I want to tell you is only that we have a clear strategy, what is helping the ecosystem from a political environment, from a regulatory environment, to improve, and we are working on that one. Now, this is about the regulation, getting fast on the portfolio strategy. You know the deals. Our portfolio strategy forward is first. In Europe, we're going to have selective and minor fixed mobile convergence ICT acquisitions in our core integrated markets. T-Mobile Austria and T-Mobile Netherlands, we a little let them play like a mobile attacker. A little bit more than the T-Mobile US business, knowing that it's different, but Claudia is going to talk about that tomorrow. In the US, we pursue on the US Un-carrier strategy, continue the de-risking, the self-funding, and the kingmaker asset strategy. That's not going to change. And we will have in our Q&A probably a long discussion about what is the way going forward with our US entity. We have a great asset which is developing nicely with a good value plan going forward. Others, further monetization of assets if more value can be crystallized outside of the group. Scout is leading us the way. We will consider smaller technology and M&A to strengthen the business innovation capabilities. And opportunistically, we are approaching minorities in the Eastern companies only if economically attractive. We are not doing bad deals, just of the sake of getting 100% of these entities. In general, no major acquisitions outside of our footprint. Because the balance sheet, because the value, the synergies, the regulatory environment, nor the requirements which we have in our entities today would, justify moves in this regard. We reduce our indirect cost ex-TMUS by 1.8 billion. This is the commitment of our business case. That said, we will further increase the variable part of our cost base. The target is to reduce the indirect cost by 5 percentage points to 61 in 2018, and then further towards 50 to 55% in the early 2020s. We want to be more variable in the way how we're operating. This is along the countries and the segments, and you see the numbers on the right side. This is excluding the US, with 1.8 billion contribution coming from the segments. Why are we doing that? Infrastructure transformation requires lower cost per gigabyte, and this will then help us even to fund the infrastructure investments, and a lower portion of indirect cost even provides us with more flexibility for unseen circumstances, can be seen as measures to reduce our risks in this pot as well. And we want to improve our margins. We want to improve the return on capital employed. We want to improve our balance sheet ratios along the guidelines we are giving. This brings me to my last slide on the strategy, which is the leadership thing. Culture eats strategy for breakfast. If you do not have the right team, if you do not have the right people, if you do not have the right transformational leader, this total transformation of this company will not going to work. So therefore, we have started a big initiative on a new kind of leadership culture, more job rotation, 24 jobs in my T3 program of the top 300, 24 people were moved in last year within the group, 17 rotational, horizontal rotation. Just the beginning. You have seen the move in sales in Germany, a pure rotation, and other examples. Rotation is the best way that collaboration is getting better within the group. Clearer end-to-end responsibility is very important. In a big organization like this, who is owning? By the way, you find a lot of people saying, if something was successful, it was me. But if you have people, if something's going wrong, you won't find somebody. We are changing this. If you look to the system's new setup with 3 clear pillars, the digital division, the IC business, and the telecommunication international business, clear end-to-end ownership. Clear end-to-end ownership. We will link our incentive schemes even more to performance and shares. In the US, we have already every employee being incentivized by shares, but we will further raise the bar and we will further use the share as an incentive instrument within the group, push for cross-functional, cross-segments careers, and even, invest into training. And just, this small demonstration outside was just a proof that we are already working on it, because there was a discussion how we're going to change our education within Germany, and they didn't like at least the ideas from the beginning, but you see that we are already triggered these events. The last topic on the strategy, and I cannot tell you how important that is the perception of the brand and the strength of the brand. Maybe some of you have seen Global 500. What is the most valuable brand from Germany in the world? BMW. What is the second most valuable brand in the world from Germany? Deutsche Telekom. $31 billion. And by the way, if you compare ourselves with Vodafone, significantly billions ahead of Vodafone, significantly ahead of Telefonica, even double the amount of some of the other carriers in this world. Now, we don't give something on that numbers, but it gives us an indication. And the brand drives perception. And if you look to the brand values of our companies, what you could see, we are by far the most trusted internet and mobile brand in Germany. By the way, you see that 46%, and Apple and others, are significantly behind us. We have to elaborate and work on these things as an additional differentiator, as additional thing we could combine into our offerings. So the brand is very important, and Magenta 1 is even something with resonated with high values. Now, finishing, I do not go into that one. Please have a look. These are the strategic priorities. These are the financial implications in each of the segments, and my colleagues will talk about that, about the commitments in their presentations later on. This brings me to our financial strategy, and even here, I know that you are all trained on this slide. This is in every roadshow, in every bilateral meeting we have had, we talked about it. It stays as it was, and we are amending it to some of the requirements. Thomas is going to talk about that one. The undisputed access to capital markets, debt capital market, is a must-have for this company. We always had this liquidity reserve of 24 months. This always helped us in market, where the markets were were weaker. We have in the middle the strategic leading imperatives for our companies and how we're going to create a value higher than the weighted average cost of capital. Transformation of costs, transformation of portfolio, transformation of our infrastructure, and even, a risk portfolio is a must-do, as we did it in the past. And on the equity side, we make a new commitment with the increase of our parameters, which I show you in a second. We will guide a dividend of 50 cents as a floor per share for the upcoming years. And with the free cash flow, the dividend is going to increase following the performance of that company. On top of that, the dividend in kind is something we want to consider as well for the future. Now, the guidance. And here you see the results of 2014, 62.7. What we expect for 2015 is growth. Now, the question is, what is your assumption for the dollar exchange rate? I don't know. I don't know your models. I would love to understand your models. And therefore, we have put it into very clear wording here. In the middle, you find the guidance based on the assumption on our business plan and the budget for last year and even for the upcoming years. On a dollar base of 133, we expect an EBITDA which is growing from 17.6 to 18.3, and a free cash flow which is coming up from 4.1 to 4.3. On the current exchange rate, which is $1.13, the company would deliver on an EBITDA around 19.3 and a free cash flow of 4.3. Why is there no change on the free cash flow number? Because there's not so much free cash flow contribution coming from the US. So therefore, that doesn't make a big difference on the exchange rate. I think it shows no hockey stick, commitment for growth already this year. For the upcoming years, I think this is unique for European telco. And you could even say this is brave. And that is unusual compared to what you have gained from telco operators in the past. We are willing and we are committing and we are convinced from the measures I showed you, from the strategy, from the strength of the brand, from the success with the investments which we have, that we are able to deliver until 2018 a CAGR of 1.2% on revenues, 2.4% growth on EBITDA, 10% growth on free cash flow, adjusted earnings per share of around €1 for 2018, a growth ROCE which is ahead of its WACC, and a cash capex which stays at this high level and even a little bit higher to fulfill the requirements of our customers of 1 to 2%, and a shareholder remuneration with a floor of 50 cents following a free cash flow growth, even increasing this total amount. So this is the commitment. This is now open for debate. This is now ready for going into the detail of the story. I think it's a very convincing story. The team is totally excited about achieving this. I hope you appreciate the work. Thank you very much for listening.